Jenny.
Hey, y'all.
Are you ready?
I'm good. What do we have today?
We're going to do a 3-minute video. What are you talking about?
Oh, I don't know. You tell me. All right, today we're going to talk about the impairment of non-financial assets, specifically PP&E, intangible assets, and goodwill. So I only have 3 minutes, so let's get started with PP&E first. So impairment of PP&E is governed by ASC 360 and requires to be tested for impairment only when a triggering event is identified. So when a triggering event is identified, a company would take a 2-step approach to test for impairment. So here is the first step, which is known as the recoverability test. And what a company is going to do is they are going to prepare an undiscounted expected cash flows for the asset or the asset group, and they're going to compare that to its current carrying amount. If those undiscounted cash flows are greater than the carrying amount, well, then there's no impairment. But if those undiscounted cash flows are less than the carrying amount, then a company has to move to step 2. So step 2, as you can see here, this is where you're going to take the carrying amount and compare it to the fair value of the asset or the asset group. If the fair value is greater than the carrying amount, you're good. There's no impairment. But if the fair value was less than the carrying amount, well, then you have an impairment. The difference between those two amounts represents the impairment. You recognize it, write the asset down to its fair value. Now keep in mind, finite-lived intangible assets, which are also amortized, follows the same exact process. But what about indefinite-lived intangible assets, right? These are not amortized, they have an indefinite useful life. Well, this is a little bit of a different process. So this is governed by ASC 350, subtopic 30, and what this requires is an annual impairment test. It's a 1-step quantitative approach. Now, keep in mind, if in the interim, a company does identify a triggering event, then the company would perform a qualitative analysis to see if there is any impairment. But let's get back to that annual test. So like I said, annual test is a 1-step quantitative process, but also includes an optional qualitative assessment. So you can see here the details of the qualitative assessment. And again, if it's more likely than not, if the carrying amount is less or greater than fair value, this will determine if there is no impairment or you have to perform the 1-step quantitative test. Now, this 1-step quantitative test entails taking the fair value of the indefinite-lived intangible asset and comparing that to its carrying amount. If the fair value is greater than the carrying amount, no impairment, you're done. But if that fair value is less than the carrying amount, the difference between those two represents your impairment amount. Recognize it, write the asset down to its fair value. Now, last but not least, we have goodwill. Again, goodwill is also not amortized. It follows the same exact process as indefinite-lived intangible assets. It's just tested for impairment at the reporting unit level. Clearly, there's more to cover when it comes to impairment testing of non-financial assets in 3 minutes. So feel free to check out all of our amazing courses on testing for impairment of non-financial assets on our GAAP Dynamics Learning Library. Hey, I got 3 minutes, Andrew. I can't mess around.